Hi traders, you're welcome back once again to the Bullish Bear FX Academy. My name is Tim Legend. I'm super excited having you all here today on this one. So you're welcome back once again to the 2024/2025 trading syllabus. Here in this channel, our goal is to teach you a whole lot you need to know and probably everything you need to know about trading from start to finish till you become a professional in this. And the goal is we want to take you guys step by step until we make sure that you are good in the trading industry. So what you want to do in case it is your first time here is to hit the subscribe button, turn the notification bell on, and please, as a way to show the support and as a way to show that indeed you appreciate our efforts and what we're doing in this channel, make sure to hit the like button. And at the course of the video, if you have any question, please do not hesitate to drop them on the comment section, because based on your question, I will understand where you need more explanation and know how to teach you more even in subsequent videos. All right, so make sure you engage in the comment section. So let's get into the main video.
Okay, so trading when tired or stressed. Traders, this is one thing you must always make sure you don't do. Anytime you're stressed or tired, don't trade, because already trading the market deals with your emotions. And how much more you're stressed and tired, your body is not in order, and then you still place a trade. That's just like you hitting yourself more and more. Hmm? Whenever you're tired or stressed out, don't enter the market. Just leave the market. Rest and put yourself together before you get into the markets. Another thing, when you trade in the market and you make losses, leave the markets. Put yourself in order before you get back into it. But what I do sometimes is if I make losses in a day, I don't trade that entire day. Is the next day you see me in the markets. Okay? Instead, if there be anything to move me back to this chart, it's just for me to check out why did I lose the money. When I check it out and I see why I lost it, I'll just be like, oh, so this is why I lost it. And then tomorrow I'm coming back in full force. All right. Now, 15 things you must do as a forex trader. Educate yourself. It's very important. Don't ever stop educating yourself. Keep checking out, keep learning new things. Invest time in learning about forex trading, including fundamental, technical analysis, and trading strategies and risk management. Don't say you know it all. Even I am still learning. Every single day, I keep checking out new things. I keep learning new things about trading the market. All right, because I'm not even there yet. All right, so keep learning. Create a solid trading plan. Develop a well-defined trading plan that includes your trading goals, risk tolerance, entries, exits, strategy, and position sizing. So when we're talking about creating a trading plan, all these things must be involved in it. Your what? Trading goals. What are you what's your plan for the week? How much are you planning to make for the week? How much are you planning to make for the month? How much are you even planning to make for the year? All right, your trading goals. Risk tolerance. How much am I willing to risk today? Okay, I'm waking up. I just woke up today, 9 a.m. Yeah, okay, I want to trade today. How much am I willing to risk on any trade I take today? In fact, how many trades am I willing to take per day? How many positions am I to open? These things must be your trading plan. We're going to take one of the days and learn how to create a solid trading plan. All right. Risk tolerance, very important. Your entry and exit strategy. What must I see before I place an entry? What must I see before I exit? Very important. And your position sizing. You need to know how many positions are you opening? What lot size are you using? Very important. Number three, practice on demo accounts. All right. Practice on demo account. We've talked about that on the other end. Choose a reliable broker. All right. Don't just get into the market and you want to trade and you start and you trade, you open any kind of broker. You must make sure you make your research. Check out reliable brokers, brokers that has lasted and are still working to date. Check them out. Master risk management, very important. Start small. Begin trading with a small portion of your capital. That was what I said at the initial. When you want to trade, when you're trading with your demo accounts, you don't want to when you're trading with your demo account, you don't want to trade for so long with a demo account. When you trade for a few months with a demo account, get into a real account with just little. Use it to arrange yourself. Use it to gain experience. Use it to learn things. All right, acquire new knowledge, train your emotions. How do you feel when you lose money? How do you feel when you make money? These are two different feelings. There's a video I dropped sometime in our traders group where I showed a cartoon, a cartoon of a guy who was trading. When it was in profit, he started dancing, whoa, 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 whoa. And the next minute, boom, the market went into deep loss. It was just like he should just fall and die. You understand? All these are the emotions you should know how to control. You should learn how to control your emotion when you're at risk. You should know how. Sorry, you should know how to control your emotion when you're at profit, and also how to control your emotion when you're at loss. Very, very crucial. Okay. Sorry, give me a second. All right. Stay informed. Stay informed. Very important. Always keep yourself updated. Very important. All right. Use technical analysis. We've talked about that. Keep emotions in check. Very important. We are going to learn all these things during this training. Okay. Keep your emotions what in check. Maintain emotion discipline. Avoid making impulsive decisions driven by fear or greed. Driven by fear or greed. A lot of times, a lot of traders want to place a trade. They have made their analysis. The analysis is good. It's perfect. In fact, their trading plan has told them, look, it's time to trade. All your confidence has been met. Enter for fear. Oh, I don't want to lose. If I trade it now, I hope I will make this $20. I hope I wouldn't lose it. Fear. Another thing is you've made money, but you want to trade again. Greed. You must keep your emotions in check. Maintain a trading journal. Record your trades. All right. Today is Monday. I want to trade. How much did I make today? You record your trades. How much did I lose today? You record your trades. All right. Decisions and your and rationale behind them. This helps you learn from your success and mistakes. Okay, so it helps you learn from your success and your mistakes. When you lose, you check out why did I lose. All those things are important. Maintain a trading journal. Number 11, diversify. Avoid putting all your capital into a single trade. All right, avoid doing what? Putting all your capital into a single trade. So don't just place every trade like a lot of traders will do. You see, they want to place a trade instead of them to use a little lot size and probably open a few positions. They want to put almost all three standard lot size in a single position. All right. Zoom has given us 9 minutes, and this session will be cut off. So once it's cut off, please rejoin again. Okay, just use the same link I dropped earlier and rejoin again instantly. All right. So another thing is continuous learning, right? We've talked about it. Use leverage wisely. We've talked about it. Don't overtrade. Don't use lot sizes beyond measure. Practice patience. Very important. Practice patience. Now, what is price action in Forex? We want to ask ourselves, what is price action now? Price action in Forex refers to the study and analysis of movement of currencies, price on a price chart. So when we get into the chart, we understand it better. When we're talking about price action, we're talking about understanding the movement, how price moves, where it's coming from, where it's going to, what it's about to do, what it did before. All right. You want to understand the market movement, and that's what we call price action. What action did price take? When it was here, what did it do? What action did it take? What did it create? What pattern did it create? This is what we call price action. So he says it is one of the fundamental methods used by traders to make trading decisions without relying on indicators or oscillators. So when we're talking about price action, this is you wanting to understand the market movement by yourself without wanting to rely on indicators or robots or any trading AI or whatever. You want to be the trader here. So price action trading focuses on understanding the patterns from the patterns, the formations, and behavior of price movement to predict potential future price movements. So now let us look at a few things you get to observe as a price action trader. Number one, candlestick patterns. All right. When we get into the chart, we'll understand all these things where I'm just giving us a simple theory. Right? Candlestick patterns. Now, these patterns, all right, are formed by the arrangement of candlesticks on the charts. All right. Now, the charts can indicate potential reversals or continuations in price trend. So when we talk about candlestick patterns, we're talking about what did price create? How did price react when it was in a certain zone or in a certain area? And you can understand that using the candles that it prints on the charts. I hope I'm communicating. You can understand that when you see what candle it printed on the chart. I always tell traders that candlestick pattern is the language of the charts. For instance, if you travel to France and you can't speak French, you will just be like a confused person in their midst. Why? Because you cannot hear what they're saying. All right. And that's the way it is when you get into the forex charts and you cannot interpret candlestick patterns. Trader, you will just be confused, like what's happening. You can place a trade right now thinking it's going to go bullish, and at the end of the day it goes bearish, and you don't know that there was a candlestick pattern that was actually telling you that look, it's likely going to go bullish, but because you couldn't interpret it, that's why you failed to take the right trade. So we're going to still study this and learn it properly to know what candlestick tells you. When you see this kind of candlestick, what is it saying? Support and resistance levels. So as a price action trader, as one who is trading with price action, you should know how to use your support and resistance levels. You can never overlook it. You can never overlook support and resistance when it comes to trading the financial market. Support and resistance is very, very, very crucial because support and resistance tells you where price is going to hit and fall from, or where price is going to bounce and rise from. All right. Trend analysis. Trend analysis. You must not overlook that as a price action trader. You must trade along with the trend. Very important. So price action traders look for trends which can be upward, which also means bullish, or downward, which means bearish, to determine where to buy, sell, or stay out of the markets. All right. So when you observe the trend of the market, it tells you three things. It tells you, should I buy? Am I to buy the market today, or am I to sell the market today, or am I to even stay out of the market today? How do you know when to buy? If you see the market is bullish, even on a higher time frame, you know it's a buying day. If you see the market bearish on a higher time frame, it's a selling day. If you see the market ranging, trader, is a stay out of the market day. Unless you just want to scalp out a little pips out of the market, but is you putting yourself at huge risk. All right. Chart pattern must also not be neglected when it comes to price action. Chart pattern is the patterns that the price creates when it moves. Just like we have the candlestick pattern, which is the language of the markets, we have the chart pattern, which is also the language of the markets. All right. What did markets create? What did market? How did market move? What did market do when it was here? Chart pattern also tells you those things. Price rejection. Observing how price reacts to certain levels can provide clues about the strength of buyers or sellers in the market. Remember that in this market, you are not the one moving the candlesticks. Even the big men in the markets who you see on YouTube who trade $10,000, $20,000, they are in the ones moving the markets. The people really moving this market are the higher institutions, There are people who invest huge amount of money. There are people who invest money in on January, and that money is to last for the entire year. And you should know that what kind of amount of money that should be. There are people who once they wake up each day, the kind of amount of money they load, those are the things that moves the market. The higher institutions, the big banks. When we're talking about big banks, I'm not talking about the normal local banks around you. I'm talking about the central banks of each country. For instance, we have the US Central Bank, all right?